Welcome back. Ahead of Uber's results before the bell tomorrow, new data shows a standard ride for competitor Lyft is 4% cheaper as it slashes prices to gain market share. Deirdre Bosa is here now for today's Tech Check, and that could peel off some users, Deirdre, cause a little bit of a price war.
Yes, and it also ties into profitability because ever since Uber went public, the story has been around that profitability. First, on an adjusted EBITDA front, and then GAAP net income. So Uber has made strides on both of those fronts. They beat and raised adjusted earnings over the last few quarters, so investors will want to see them again. In terms of net income, we talked about this last quarter. A lot of that has relied on unrealized gains on equity stakes and other companies that Uber is in. So they're going to need to show sustainable profits. And remember that there's a new CEO. So it also raises some questions about capital return plans. Are they going to start returning a little more to investors? Now, and this is what you referred to, Kelly, what could also affect profitability is a new price war that we may be seeing in ride sharing. Lyft's new CEO, David Risher, when he came in, he really tried to be more aggressive on that front. And some third-party data from Yipit that you're looking at right now really shows that as well. And according to that profitability, Kelly, that could determine S&P inclusion, which some are expecting on the street could happen as early as this year. Last thing I will say, though, this is a stock that's trading at $47 and change. It has nearly doubled this year. It's still just a few bucks above where it IPO'd back in 2019.
Do you think Uber could just shrug off the pricing challenge from Lyft?
Well, they do have the Uber Eats business, right, which has been making more and more of that profitability and revenue. So it might be easier for them to shrug off than it has been in the past. So, yeah, I think potentially it could. But again, ride sharing, when the economy is doing better, that's when people are taking more of that. And it's always been the sort of tit for tat with Lyft. And Lyft isn't going away, at least with David Risher yet. So it could provide some stress a little bit, maybe.
Sure. What about on the regulatory front?
So the regulatory front is interesting because they had this sort of battle in New York City where, ride-sharing drivers were trying to get, a minimum wage. And there's always this question overhanging Uber and Lyft of how are they going to classify the drivers? Because if they were not classified as independent contractors, the whole business model essentially falls apart. So on that front, we got a settlement on Friday. That's good news for Uber and Lyft, basically because it does not classify those drivers as independent contractors, even though they're going to have to pay, more than $300 million to settle it. The bottom line is that they get to keep their status, and that's a good thing for Uber and Lyft.
You can see the stocks perking up on that as well. Deirdre, thank you for now. We appreciate it. Deirdre Bosa will hear from Uber tomorrow morning.